Okay, so good evening once again. My name is Derek. Um, Normally people call me Financial Derek, and I'll be taking you through accounting theory. So today, what we'll do is that we'll look at basically an overview of accounting theory, and then we'll take our very first chapter for today. So today we'll not go into detail, but it's actually meant to get a fine idea about what accounting theory is and what are the specific issues we are likely to meet in an exams. Okay, I hope you can see my screen. Okay, great. Can you see my screen? Can you all see my screen?
Yeah, we
Yes,
can.
yes.
Okay. So these are the topics we'll be treating on the accounting theory. So basically we have eight major topics. Eight major topics. So what it simply means is that all of these topics are examinable. All of these topics are examinable. However, let me just make some very quick um information on some of this topic. So for example, topic number 5. Sustainability accounting and finance is a very crucial topic. In fact, in the last exam, it was a compulsory question that carries 30 marks. So the full exam was actually for 60 marks, and the question on sustainability accounting and finance was a compulsory question, and that compulsory question was for 30 marks, which is like half of the total marks. So this is a very important topic. So let's start. So these are the topics we'll be looking at. We'll be looking at introduction to accounting theory. We'll be looking at the philosophical and theoretical underpinnings when it comes to accounting. So accounting as a profession, what are the philosophy that um talk about accounting? What are the various theories that we can actually give reference to when we talk about accounting? So these are the issues we'll be looking at our lecture 1, which is Introduction to Accounting Theory. Then our second topic will be fairness disclosure and future trends in accounting. So when we talk about fairness disclosure, the accountant, the traditional accountant, are they fair in their disclosure when they prepare the financial statement? Is the financial statement not skewed towards just one stakeholder, which we all know is shareholder? Because basically, the financial statement is prepared for shareholders. So is it true that when the financial statement is prepared, the presentation of it, is it mainly for just one stakeholder? Is the accountant fair in their disclosure? And then we'll also look at the future trends when it comes to the accounting profession. So now we are in the age of AI, cryptocurrencies, and the rest. What are the means, the procedures, and controls that the accounting profession itself is putting into place to adopt these new trends? So we'll look at future trends and even current trends in accounting. And then we'll look at a very important topic, executive compensation. Executive compensation. So when we talk about executives, those who manage the business, those who manage the entity, like the CEOs, the CFOs, the CEOs, their compensation, is it fair? Is there a scientific way to determine how executives are compensated, or it is just something that is just done randomly? We look at those issues, and then we look at earnings management. But before we do that, just a minute. as I'm going ahead to discuss, if you have any question, please you raise your hand, and then the administrator will ensure that your microphone is on mute so that you can speak. So the class is a very interactive one. If you have any question, feel free to raise your hand, or you can even put the question in the chat box. Thank you very much. So after executive compensation, we'll be looking at earnings management. Earnings management. When we talk about earnings, basically we are talking about profitability. We are talking about profits. So how does entity manage their profits? Earnings management in itself, is it an ethical way of presenting one's financial statement? Is it something that is allowed? Is it something that is supposed to be encouraged? So look at various earnings management issues. And then sustainability accounting and finance, which is a very crucial topic. Now we are in a modern world. And the word we are in now, it is a very fast moving word. Therefore, accounting and finance in itself must appreciate the issues around its environment. Therefore, issues about profitability alone are not enough for a company to exist and to be sustainable. Therefore, the entity must be concerned about what happens to the environment. So that's why in sustainability, we look at the 3 P's of sustainability, which is the profits, the planet, and the people. So the profits will be looking at the economic side of sustainability. The people will be looking at the social aspect, and then the planet will be looking at the environment. So these are the 3 P's of sustainability. As an accounting and finance student, ensure that sustainability accounting and finance is your friend. And on a personal note, this is an area that I'm very, very much involved in. My thesis work was about sustainability accounting and finance. So I'm very, very passionate about this specific issue. And I'm also glad that the lead facilitator is also very passionate about it. And that's why it is a compulsory question. It is a compulsory question. And then we'll look at decision usefulness of accounting information, financial reporting, information perspective, and measurement perspective. So when we talk about accounting information, what are the usefulness of accounting information and the various perspective when it comes to the measurement and also the reporting of the information? We'll look at all those issues. And then we'll look at international accounting. Accounting by itself can be localized, that is within a specific country. However, due to the rise of accounting standards, so now we have IFRSs, International Financial Reporting Standards, and IPSAPs, International Public Sector Accounting Standards. So due to all of these changes in the accounting world, there's a need for accounting in itself to be an international profession. So we'll look at international accounting and what are the issues that it speaks to. And then finally, we'll look at the International Accounting Standard Board conceptual framework. So this conceptual framework, they are actually the foundation. They are the basics. They are the roots from which accounting is built on. So for example, we look at issues like the matching concept, the going concern concept. All of these issues will be looked at under the IASB conceptual framework. Please, any question? Please, am I going too fast or am I going too slow? I need your feedback.
Well, Derek,
You're
I
on
think it's
track.
okay.
Please say again.
You're on track. Let's go.
Okay, great. Great. So, after going through all of these topics, these 8 topics, someone may ask, but Derek, how are we going to be assessed? Because it is very, very important you understand what goes into your assessment, because it forms a foundation for your learning. So this is how the assessment is going to be done for the semester when it comes to this specific course. So students will be assessed, one, based on what we call continuous assessment. And the continuous assessment is normally 40 marks. And one may ask, what goes into the 40 marks? This is the spread of the 40 marks. The 40 marks entails assignment. You'll be given a general assignment. And please, please, and please, after this class, before we end this class, I will share with you the sample question which we were given and which has been given over the period of time. That question, please do not joke with it, because you may not do a mid-sem when it comes to accounting theory. That assignment will form part of your mid-sem, and it is for 40 marks. So don't joke with it. And let me tell you a story. Last year, a lot of students failed accounting theory. And one of the reasons was that a lot of students did not pay attention to the continuous assessment. That's one. Two, a lot of students were not able to grasp the concept when it comes to accounting theory, because accounting theory is very technical. It entails every component of accounting: financial accounting, cost accounting, management accounting, everything, even a bit of auditing. They all form part of accounting theory. So understanding the concept is very, very important. And then finally, the final exam will be for 60 marks. And please, 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 and please, if you were thinking about MCQs when it comes to accounting theory, just take your minds off it, because there will be no MCQ. I can guarantee you on that one. There will be no MCQ. You will have to understand the issues, comprehend them properly, and then construct beautiful sentences, because the lecturer loves writing. There's nothing like MCQ. So if you are thinking about MCQ, there's nothing like that. You need to fully understand each of the issues. As I told you, each of the topics are examinable. All of them, they are examinable. So please, the final exams is 60 marks. So it will give you a cumulative total of 100 marks for the semester. I hope we are all okay with this. Okay, great. Great, 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 and great. So let's now look at what we are going to do is that we take each of the topics and we look at the issues that are under each of the topics, or we can say the subtopics under each of the topics. So for example, lecture 1 and 2 entails introduction to accounting theory and theoretical and philosophical underpinnings of accounting. They look like very big jargons, but that's why I'm here. I'm here to actually break them down to the simplest meaning. So our first topic, which consists of unit 1 and 2, deals with introduction to accounting theory and theoretical and philosophical underpinnings of accounting. So we'll be looking at the theories of accounting. So you know that in accounting, we have different theories: stakeholder theory, shareholder theory, different kinds of theories. All of these theories will be examined. And then we'll look at the philosophical underpinnings when it comes to accounting. So there's positive accounting, there's social accounting, there's behavioral accounting, there's normative accounting. All of these issues will be looked at. So we'll also be looking at theory. What is a theory? I know most of us, we learn what a theory is from our business research. However, that what is a theory is the same here, but the understanding of this theory is in the accounting language. So we'll be looking at what a theory is. We'll be looking at the features, what make a theory to be a good one and a bad one. So we'll be looking at the features of a good theory. And then we'll also be looking at the distinction or the difference or differences between normative and positive theories. So basically, we have two types of theories when it comes to accounting. There are actually three, but the main ones are two. That's the normative theory and the positive theory. So what is a normative theory? It will be explained. What is a positive theory? We'll look at that also. And then what is accounting theory itself? You see, first, we look at what a theory is in general. So first, we are looking at what a theory is. But we'll now be looking at what actually is accounting theory and what are the aims or what are the objectives of accounting theory. We'll also look at that. And does accounting theory, does it play any role in the society and in the larger economy? Does it really play a role? Yes, it does. We'll be looking at the roles that the accounting theory plays or the role that accounting theory plays in the society. And then finally, we'll be looking at the overview of other theories in accounting. So stakeholder theory, shareholder theory, all of these theories will be examined. Please, any question on lecture 1 and 2? Any question? Okay. So when it comes to lecture 3, we'll be looking at fairness. Fairness, as we all know in accounting, is a bedrock of the accounting profession. You see, always when the auditors, when they prepare their reports, when you take an audit report, the most important aspect of the audit report is what the auditor gives his opinion on whether the financial statement shows a true or fair view, or true and fair view. That issue of fairness is very, very crucial when it comes to the accounting profession. However, in terms of disclosure, is the accountant actually fair in their disclosure, or when they are disclosing items on the financial statement, their focus is just on one group of stakeholder, which is shareholder? Do they actually meet the aspiration of other stakeholders like employees, like the government, like the environment? Do they actually do that? Or the report is just skewed to just one stakeholder? So we'll be looking at fairness in accounting to actually see whether accountants are actually fair or not. And then in terms of distribution, how the accounting information is presented on the financial statement, is there any form of fairness? Does the accountant prepared the financial statement in a way that it shows the contribution of employees, it shows the amount of social events or the amount of social interventions the entity has been able to do during the accounting period? All of these issues will be looked at. And then we'll be looking at new accounting disclosure. So now we are in the world of sustainability. When the accountants, even very recently, ICAG through IFAC and the IASB issue sustainability reporting standards. So when the accountant is now reporting their financial statement, they are not just restricted to the traditional way of reporting, where you have your statement of financial position, note to the account, and the rest. sustainability reporting or sustainability disclosure should also form part of the report that the accountant is supposed to be given. Because now we are looking at ourselves as modern day accountants, not traditional accountant that is just concerned about the shareholders' profitability. No, the word has actually moved from profitability to more of what? Sustainability. So it is very, very important that when the accountant is presenting his or her financial statement, you can see clear fairness in it. Good, great. Then we'll be looking at executive compensation. This is a very, very important issue when it comes to accounting. Sometimes you work at a firm because of your position as maybe a senior accountant or an accountant. You are exposed to so much information. And sometimes some of the information you are even exposed to is salaries of even top management. Sometimes, even when you see some of the salaries, you're like, hey, wow, is this how much the CEO is paid? Is this how much the CFO is paid? So when it comes to executive compensation, it is a very, very important issue. So is that compensation that the executive receive, is it fair? Is there a scientific way that is being deployed to actually determine how much the executive, the top management are supposed to receive? We look at all of these issues. We look at factors that influence executive compensation. What are the bases in which an entity uses to determine how much a top executive should receive as compensation? And please, yeah, when we say compensation, we are not just talking about the salaries that the CEO, the CFOs, and the CEOs received. We are talking here about their full benefits. You can see that sometimes a CEO is entitled to a car, is entitled to a house. Sometimes the entity even pay the fees of his kids, is entitled to a vacation, a paid, so many things. Sometimes he's even entitled to shares, bonuses, and the rest. All of these issues, they are what forms part of what we call executive compensation. And the theories that has been propounded over the period of time when it comes to executive compensation, we'll look at those theories. And also, we'll look at what we call the net income and the share price means of assessing managers. Do you assess managers just based on profitability? Do you assess managers just based on share price? What are the dynamics? What are the ingredients that goes into each of these methods? We'll look at those. And what is the risks that involves when it comes to executive compensation? Are there even any risks? If there are risks, what are some of the mitigating factors an entity can put in place to mitigate these risks? Great. So I'll pause here. Does anyone have a question before we go to any management? Any question? Any question? Suggestion, questions, contributions? I hope everyone can hear me clear.
Hello.
Yes, we
We
can.
can hear you. Go on.
Okay, sure.
Yes, we can hear you.
Great.
So from what you are saying, it means you are briefing us about what we will be learning.
Exactly. Let me get your name.
All right.
Let me see the person who spoke.
I'm Patrick.
It's Patrick, right? Great. Yes. So Patrick, we are doing an overview of all the topics, all the issues that we are supposed to meet. And the truth is that you are supposed to do all these topics in 4 weeks. So 4 weeks, all these 8 topics in 4 weeks. So it means it required lots of dedication and lots of commitment. Please, one major rule, please, when you join the class, with the greatest of respect, please join the class with your name. Even if you can use your full name, that's better. So please, all those with iPhone, Samsung, Zoom user, please, we don't encourage that in the class, because I would love to know who is asking a question or who is responding to a question. So please, whenever you join the class, try and change your username to your actual name. So I'm seeing lots of Samsungs, and it will be difficult for me to even call a Samsung person to like ask a question because I don't know your name. It will be difficult. So please, with the greatest of respect, you change the username to your actual name. Great. Good, 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 good. So let's now look at earnings management. Earnings management. Earnings management. One of my favorite topics, earnings management. So normally when we talk about earnings management, there are techniques, procedures, policies that management implement in order to make their financial statement to look very nice. That's the easiest way I can explain it. Measures, procedures, policies that management use deliberately to make their financial statement to look very nice. So someone will say is a means of what? Window dressing the financial statement. Another person will say it's a means of what? Cooking the books. So sometimes you hear that accountants, they like cooking the books a lot. In fact, it is unethical for an accountant to do that. That's why fair presentation is very crucial. You see, we just saw fair disclosure. As an accountant, when you prepare your financial statement must show the true and fair view of what has actually transpired during the reporting period. You shouldn't window dress items on a financial statement. It is very unethical. However, it happens. And what are some of the reasons why an entity will want to engage in an act like earnings management? As an accountant, you must appreciate these issues. So, are there any accounting theories that support, or are there any schemes that support earnings management? We'll be looking at those issues. Are there merits and demerits? Are there advantages when an entity involved in earnings management? Are there disadvantages? We'll look at those issues. What are the implications when an entity is involved in earnings management? When they window dress their financial statement, what are some of the implications? In fact, I can give you one implication. If one of the implications is that it can deceive potential investors. So maybe the entity is not really making profits, but due to the window dressing, due to the earnings management carried out by management, it can convince an unknown and uninformed investor to invest in that entity. So that becomes what? A negative implication. And then we'll look at earnings management in itself. Is it ethical? Is it ethical? Is it right? Is it something that the accounting profession supports? Is it something the accounting profession encourages? We'll look at those issues in details. And I know some of you at your entity, you are involved in earnings management, but I'm sure after this class, you revise your notes. because earnings management is actually not a good thing, even though there's an argument in favor and also against it. Everybody will have their view on it. That's the reason I like earnings management, because it is very, very subjective. Someone will tell you that earnings management is a bad thing. Another person will tell you that it is good. We'll look at all the arguments. Legacy, please, you are drawing on my board. Just a minute. Let me stop sharing this and reshare again. Okay, great. So we'll now be looking at sustainability, accounting, and finance. As I earlier told you, this is a very, very dear topic to me personally. My thesis work was on this specific topic, so I really, really love sustainability accounting, and the lecturer also love it a lot. That's why normally his exams, sustainability accounting and finance, is a compulsory question. It suffices to say that you cannot complete accounting theory at KNUST and you don't understand sustainability accounting and finance. It will be a disservice to yourself. So when we talk about sustainability, in terms of sustainability development and climate change, what are the issues? What are the underlying issues when it comes to sustainability? What has given rise to sustainability? Is it just about climate change issues? We'll look at all those issues in details. We'll look at the role and significance of sustainability for organization. Now, you see, sustainability is actually a new issue in our part of the world. To be specific, in Ghana, is an emerging issue. But when you go to very advanced economies like the US, the United Kingdom, Australia, and the rest, sustainability is a very serious issue that they don't joke with. In fact, some consumers, some customers may not purchase your item if they find out that you are not sustainability related entity, or you do not respect sustainability as an entity, or you don't report sustainability issue. They may not purchase your item. These issues are very, very important to them. And sustainability is a very broad issue. And most of you, not most of you, in fact, all of us, by second semester, you'll be required to submit your thesis topic. I'm just giving you a clue. This is one of the topics that if you give to any lecturer, it is extremely difficult for them to reject your topic, because even the lecturers, they themselves, they like issues related to sustainability, accounting, and finance, because that's where the world is moving. It is a trending and emerging topic. So most lecturers, when your thesis proposal is related to sustainability, accounting, and finance, you are most likely for your topic to be accepted. Most likely. So we'll look at the deficiencies of the traditional accounting-based measures and appraisals techniques. So you know that when it comes to accounting, Safi, let me stop sharing. Okay, good. You've cleaned it. That's great. When we talk about the traditional accounting methods, we are talking about issues like net present value. We are talking about issue like present value calculation, issue like accounting rate of return. These are all appraisal techniques. I'm sure most of us, or almost all of us here, we did these topics in business finance and management accounting. These topics are traditional accounting appraisal techniques. However, we are now in an emerging world. Therefore, we need new techniques to deal with emerging topics. So now the accountant is no longer the traditional accountant that just do credit and debit. You must think outside the box. Now, crypto, artificial intelligence, they are emerging topics. As an accountant, what are your responses to these issues? That's what will distinguish you from the traditional accountant. We look at the sustainability financial appraisers. One of them is the sustainability assessment modeling, or the SAM. We look at how entity has embedded sustainability in their strategy. In fact, nowadays, when you are preparing a business proposal, if you don't add sustainability to it, it's very likely that you might not get a lot of people buying into it, because now everybody is concerned about sustainability issue. And even in Ghana now, we have issues related to galamsey, deforestation, and all of that. All of these issues, they are very, very crucial. As an accountant, you must be alert and respond appropriately to these issues. And then lastly, we look at elements related to sustainability in decision making. How does an entity embedded sustainability in taking decisions for the entity? Look at all of those issues. I'm stressing highly on sustainability because it is a very, very crucial topic. If you want to pass this course, you must understand sustainability. Okay, great. Then we'll look at decision usefulness of accounting information, financial reporting, financial information perspective, and measurement perspective. So with this topic, we are looking at the usefulness of accounting information. Accounting information, how useful is it? So we'll be looking at the qualitative nature of accounting information. I'm sure most of us will learn these ones from the introduction to financial accounting. We learned about enhancing qualities of useful information. All of those issues, we'll go back to them. We'll do a review of all of those issues. So you can actually see that accounting theory is very broad. It is a very, very broad course, extremely broad. And then finally, we'll look at international accounting. International accounting. And under international accounting, we'll look at the differences in accounting. Please, and please. The accounting that is being practiced in Ghana is different from the accounting that is practiced in China. The accounting that is practiced in China is different from the accounting that is practiced in the US. It's different from the accounting that is practiced in South Africa. It's different from the accounting that is practiced in Russia. Okay, there's a hand up. Please, sorry if I pronounce your name wrongly. Amankona. Yes, Amankona. Yes.
Yes, it's Amankona.
Yeah, great.
Thank you very much, Derek.
Please, can you mature your voice a bit?
Okay. I hope you can hear me now.
Yeah, better.
Yes. My question has to do with the sustainability accounting.
Okay.
In accounting concept, we have the going concern concept, which talk about business being in for perpetuity. So how different is it from sustainability accounting?
Okay, good. That's a very good question. Okay, good. So we all know that the going concern says that the entity shall continue in the foreseeable future. That concept in accounting, it looks at how the entity can continue to operate in perpetuity. That's accounting understanding of the entity continuity. That knowledge is restricted to just accounting. However, sustainability is broader. So when we talk about sustainability, we are not just talking about the entity surviving, no. We are talking about the entity itself, its employees, the environment, the ecosystem in which it operates. If, for example, the entity is not concerned about how the environment it operates in is being damaged, maybe through galamsey, through deforestation and all of that, it means in the future, the entity itself may not be able to continue. Because if we cannot get water again, if the environment is destroyed, the entity itself cannot continue. When it comes to the people, remember I said sustainability always look at the 3 P's, the people, the
People,
planet,
profit.
and the profits.
Okay.
Sustainability is a component of these 3. So these 3 work hand in hand, the people, the planet, and profit. So when an entity is making profit, the entity shouldn't be concerned only about the amount of profit they are making every year, but they should be concerned about the people. So their employees, the people that live around where they operate. They should also be concerned about the environment, the ecosystem. How responsible are they? Do they just dispose their waste of anyhow in the environment? No, the entity should be concerned about all of these issues. So it is all of these issues that come together that forms part of what we call sustainability accounting and finance. The going concern is restricted to just traditional accounting. Sustainability is broader than that. My brother, I hope I've answered your question.
Very well. Thank you very much.
You are most welcome. So we're on international accounting. Great, 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 and great. So I was saying that the way how accounting is practiced in every country is different. Therefore, it means that if you are a chartered accountant or an accountant in Ghana, if you go to Russia, please, the way you are doing your accounting in Ghana here will not be the same way. You have to adopt yourself to the Russian way of doing accounting. In fact, it is not every country in the world that have adopted the IFRSs. I hope we are all aware of that. It's not every country that do IFRS. There are some
Yes.
countries that do their local standards. So therefore, as an accountant, you are working for a multinational company, and the multinational company has subsidiaries in different countries in the world. You must be able to analyze financial statements from each of these countries. Don't just restrict yourself to, I am an accountant from Ghana, so my whole way of understanding accounting is just the Ghanaian way. You will get missing along the way. And accounting practice by itself is influenced by so many things. The culture of the place. We know that the culture of the United Kingdom is far different from the culture of China. The culture of China is different from the culture of Ghana. The culture of Ghana is different from the culture of Russia. So culture in itself influences how accounting is practiced. Another thing that influences accounting is the legal environment and the legal regime. Each country has its own laws, and accounting by itself is based on law. So, for example, in Ghana, we have the Companies Act. The Companies Act prescribes how accounting should be practiced in Ghana. It tells you how an entity is supposed to prepare its accounts. It tells you how an entity's account is supposed to be audited. So these things are by law. So there's a legal requirement. And when it comes to law, every country law is different from each other. So what may apply in the UK may not apply in Ghana. The tax law in UK will be different from the tax law in Ghana. For example, when you go to most of the Arab countries or most of the Islamic countries, let me use Islamic country for the lack of a better word, the way how they practice accounting there or finance is different. For example, they don't believe in giving loan to someone and then you are expecting interest. They don't do these interest things that we do here. If you are very recent or you are very acquainted with recent events, I think the government is even trying to introduce what we call Islamic banking in Ghana now. So the way how banking is done in the Islamic countries is different from Ghana. They don't even do interest and all of that. So if you take your, let's say, your restricted way of understanding accounting from the Ghanaian perspective, and you want to use that as an international accountant, you find yourself at the wrong side. So you must understand each of these perspectives and be able to put them together. And one very important aspect when it comes to international accounting is what we call harmonization and standardization. In fact, the lecturer loves these two words. He always brings them in the exams. Distinguish harmonization and standardization. But please, let me just make one very important point. In accounting theory, there's nowhere you are going to see what is harmonization or what is standardization. Trust me, that one you won't see it there. The questions are going to be like case study kind of question where you will need to think outside the box, make analysis and critical points. So you're not at your level now, you're not going to see what are the differences in accounting, discuss, okay, what is harmonization, standardization. You won't see things like that. So we'll be looking at, is there a reason for harmonization? What's the rationale behind harmonization and standardization? Are they the same? Are there any differences? We look at those issues. Great, great. Please, any question before we move to the last topic? Any questions, concerns, contributions, suggestions? Maybe I'm moving too fast. You can tell me so that I slow down. Okay, good. There are no questions there. I think we can continue. Okay, there's a hand up. Bismarck. Yes, Bismarck.
Good evening, sir. Yeah.
Good evening, senior.
Please, I joined late. I had a meeting at work, so I wasn't able to join from the start. So I wanted to ask if the slides or the recording will be shared on the page for those who are not able to join earlier to be able to.
Okay. Okay, that's a very important question. Thank you so much. Yes, the recordings will be shared immediately after the class. Promptly after the class, the recordings will be shared and the slides will also be shared. So you are covered.
Okay. Thank you very much.
You are most welcome. Okay. So lastly, our last topic for the semester or for the block, we'll be looking at the International Accounting Standard Board. This is a very broad topic. The International Accounting Standard Board conceptual framework. So here we'll be looking at the various accounting concepts, accounting conventions, rules. We're looking at the IASB. How do they set accounting standards. All these issues in accounting will be looked at. Qualitative characteristics of useful information, definition, recognition, and measurement of the elements of the financial statement. Okay, let me ask our very first question. Who can tell us what are the elements of the financial statement? Anyone? There are 5 basic elements of the financial statement. Let's revise our financial reporting quickly. Financial reporting quickly. What are the elements of the financial statement?
Assets, liability, and all those things.
Can you mature your voice? We can't hear you. Who is speaking, please? Yeah, Richard. Yes.
I think assets, liabilities, equity, revenue, and expenses, I think.
Perfect. God bless you. God bless you, Richard. So those are the elements of the financial statement: assets, liabilities, owner's equity, revenue, and then expenses or expenditure. So those are the elements. So each of these elements, we'll be looking at their definition. In fact, defining each of these elements, it is very, very crucial. Is we at this point, you are a professional, you are a master's student. Please, when you are defining what an asset is, please, please, and please, don't use the roadside accounting of defining what an asset is. It will not be accepted. You must demonstrate knowledge that you really understand what you are saying. That, for example, an asset is a resource controlled by an entity due to what? Past economic events, based on which they are expected to get what? Future economic benefits. I've just rephrased it or paraphrased it. These are the definition we are looking for. These are the keywords. An asset is what? Is a resource controlled by an entity due to what? Past events. So please don't come and say an asset is something an entity owns. Please. Like, please, 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 please. Don't do that in this class. Like, it won't be accepted. You must demonstrate knowledge. Good, 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 good. That's why you are here. We are here to help you. And then we'll look at the objective of the general purpose financial reporting. So what's the aim of a general purpose financial reporting? What is the preparer of the financial statement? What is their purpose? What purpose does the financial report aims to what? Achieve? Look at those issues. We'll look at the fundamental assumptions of the financial statement. Based on which assumption do we prepare the financial statement? There are actually 2 assumptions. There are actually 2 assumptions on which the financial statement is prepared. There are actually 2 assumptions. Can anyone tell us what are those 2 assumptions? What are the 2 assumptions that every financial statement must be prepared on? Are there no accountants here? We don't. You people, you don't prepare financial statements at your entities. What are the assumptions you prepare those financial statements? Because if you don't understand the assumptions, then how are you preparing the financial statement? Financial statements are prepared based on assumptions. Yes, Priscilla. Priscilla, please, are you saying something? Okay. Yes, there's a hand up. Anastasia. I hope I didn't mispronounce your name. Yes.
Anastasia.
Anastasia. Forgive me.
Oh,
Me, I'm
don't,
very bad when it comes to names.
don't worry. Please,
Yes,
can you
please.
say, based on the going concern concepts and maybe
liquidation or
Great, great. Nice one. Okay, any other person? I saw Richard's hand up. Richard, yes. Going concern is correct. Any other person? Yes, Safi, yes.
Yes, the accrual basis is also one of them on top of the going concern.
Okay, great. Accra is also correct. My friend, Amankona, yes. Amankona, yes. Let's take you and then yes.
Yes, I wanted to say the accrual, but already somebody have said it. So, and the name is Amankona.
Amankona.
Yes.
Please, oh, you have to forgive me. Me pronouncing names there is one of my difficulties.
No
Don't
worries.
mind me.
No problem.
But I will learn. Okay. Thank you, senior. Okay, let's take one last one. Diana, yes. Diana, yes.
Please, the periodicity concept.
Come again, please.
Periodicity concept.
Can you explain, please?
That gives the lifespan of the business, whether the financial statement is being prepared annually or yearly or half yearly or quarterly.
Oh, okay. Yes. I get your point. I get your point. Okay, nice one. Great. Let's take one more. I saw another hand up.
Okay, so can I come in? I'm Patrick.
Yeah, Patrick, yes. Let's take you last. Yeah, Patrick. Yeah, Patrick, you can take it. Yeah.
For the assumption, I know of the going concern assumption, and so the going concern assumption is the assumption. Then at times they have this history cost assumption. I don't know whether
Historical
I'm
cost.
correct. Yes,
Please, did
historical
you say
cost. Where
historical
maybe
cost?
yes,
Okay,
the
great.
historical cost.
Okay, that's
I think
also
that
correct.
one.
Yeah, you can flow. Yeah, continue.
So it's like there are about 10 of them. As for the assumptions, plenty of them. But I know of the 10 major ones that most books record. So the consistency, the accounting period assumption, I think that was what the lady was saying about periodicity. That is accounting period assumption, the lifespan of the business. Then we also have the prudence assumption.
Okay,
Where
great.
you can anticipate the losses or maybe unrealized gains of the statement. Okay, so I think I'll
That's
end here with that.
great. Beautiful. Thank you very much, Patrick. Hey, Charlie, you see, people are learning, no. See, the lecture has not even started yet, but people are learning. So, Charlie, those of us who are like last minute, let me tell you a story. Me, honestly, I don't like learning my notes early. I like waiting when it is few weeks to the exams. But please, don't be like me. Please read earlier so that you get better understanding. Because the truth is that you are combining work with this thing. And the truth is that the same thing that is being taught at main campus, MBA, or MSc main campus is the same thing that they are teaching us. Or that's the same thing they are teaching you. There's no difference. Because at the end of the day, you get the same certificate. So the lecturer doesn't even care whether you are a worker or whatever it is. He's giving you the same information. because at the end of the day, it is the same certificate you get. So why must he lower the standard? And I agree. The standard shouldn't be lower. The standard should be the same. It should be set very high. So that at the end of the day, when you are done, you can appreciate that, yes, I've actually gone through and I really, really going through it properly. So there's no means to lower any standard here. So the standard is very high. So please, Leno will be having classes. We'll also be having, sometimes we'll have early morning classes, 5 a.m., 6 a.m., maybe just for 30 minutes, 1 hour. We'll go through a question or two, just so that you keep yourself busy. Please, don't be like me and wait for exams. Don't do that. Please, Leno. Every day, even if you can take just one topic and just read, it will
Your
help
head
you.
is different.
Me, I can read everything one night and I'll be fine. Go and write. Please, everybody's not like that. So don't be like me,
You there,
please.
your head is different.
Please, Felix, you are one. Please, don't be like me. Learn, please, read ahead of time. Don't be like me, please. Okay, great. Let's continue. So this is our quote for the week. We'll be using this quote for the week. I'd like for someone to read a quote. Anyone? Every week we'll have a quote. The quote is meant to ginger and encourage you.
Quote
Yes, Diana.
from
Yes,
the
please.
week.
Yes,
Deepest
a
fear.
lady's voice.
Okay, no problem.
Quote of the week.
Hello?
Yeah, hello. Yes,
Yes.
Diana.
No, this is Tina, Ernestina.
Okay, Ernestina, yes, please.
Okay, so I read, quote of the week. Our deepest fear is not that we are inadequate. Our deepest fear is that we are powerful beyond measure. It is our light, not our darkness, that most frightens us. We ask ourselves, who am I to be brilliant, gorgeous, talented, and fabulous? Actually, who are you not to be? Thank you.
Great. Can I want like 3 persons to like just in just a sentence or two to just explain to us what really is this quote? Or what
Derek,
is the quote communicating?
let me chip in this. And this quote,
Yes,
if you have watched this movie, Akila the Spelling Bee, you find a scene where the coach spoke about this
Hey,
quote.
just a minute. Wow, I've committed an academic crime. I did not. Oh, this was a mistake. I forgot to recognize where I even got the quote from. Don't worry, I will update this. I will update my slide. I'll do that. But it's actually from Marmel Williamson. And as you said, it's from that movie, one of my favorite movies. Yeah, but yes, you can continue. Sorry. Yeah, someone was making a point. Or his network. Okay, I think there's a hand up. Diana, yes. Then we'll take Felix and then another person. Or Felix, you want to take it?
Hello.
Yes, Ernestina, yes.
Okay, so my understanding, my little understanding is that we shouldn't look down on ourselves. If someone is ahead of us or has been able to achieve something, we should also say to ourselves that we can also do that. Yes, that's my little understanding. Thank you.
Great, 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 great. Okay, two more person. Let's take Felix, and then we'll take another person. Okay, Safiano's hand is up. Let's take Safiano, then we'll come to Felix.
Is my hand up?
No, your hand is not up, but it's like you want to say something. Yes, Safiano, yes.
Yes, so basically, the coach is trying to suggest that most often than not, we are more afraid of our potential, our brilliance, and our greatness than we are of our flaws or our weaknesses or our dark side. So he's encouraging us to focus more on our potential, our brilliance, our greatness than we are so much negative or like negative outward looking, where the focus mostly is about our weakness, our flaws, or our dark side. Basically, that's how I get it.
Great, 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 great. Wow, I'm happy. So let's take the last one. Let's take the last one. One last person. I prefer a lady. Hey, my friends, the ladies, please speak. Oh, don't allow the guys to intimidate you. Let me find. Yes, any lady, please. Josephine. I'm seeing Josephine, Eunice. I think Ernestina have spoken. I want a lady who hasn't spoken. Charlotte, Comfort, Doris.
Tilly has spoken in the group chat.
Okay, let me check the group chat. Group chat. Wow, the quote talks about being firm. That's correct. Okay, that's fine. So, honestly, I wanted for us to start Unit 1 today, but because today is our first day, I don't want to overstress you. I think what we've done so far today is okay. We'll meet hopefully. I have to check the timetable. I think we'll meet on Wednesday.
Wednesday.
Yes, Wednesday. Thank you. But you are meeting Monday and Tuesday for taxation, which is very, very important. And you are meeting a very brilliant facilitator. I can boldly say that he's one of the best I've ever sat in class with. One of the best. He's an award-winning business challenge. You know that business challenge they do, the University Business Challenge. He's an award-winning, he's a champion. Let me just put it that way. So
What's the
you can
name?
just see, come again.
I'm asking of the name.
Oh, don't worry. He will introduce himself when he comes. I think he's even on the call. So, and to crown it all, he's a chartered accountant. So this is a very solid guy. Trust me. You really like the class. So he'll be taking you through taxation on Mondays and Tuesday, and then we'll meet on Wednesday for accounting theory. Hopefully we'll be able to do chapter 1 and 2. And then I think on Thursday we might do taxation again, but don't worry, the timetable will be shared with you. Before we close, let's now open the platform for questions. Questions, concerns, suggestions. Yes, for the next